Hi, this is Mark with a midweek update. This is the 18th of June, Wednesday. Later today, this evening, UK time, then there is the big event of the week is the FOMC. It's the Fed funds rate, and then it's the statement and the press conference. I will be out of everything, or if I can set an entry well away from current price, I might leave a few running through. I'm going to show you that. You have to wait until the press conference comes out because the Fed fund rate will probably come out as expected, although it could go up, it could go down, which will be a shock. But then it's what Powell says in the press conference afterwards. Sometimes he contradicts what's been said, and they're all looking for clues as to whether he's going to cut rates in the future. So it's a scary time. So the best thing to do is not to trade it and wait until the news comes out. However, technical trading, I shared this with you in recent weeks. This is silver. I've been buying silver since $17. It's now up at 37. And I shared with you this is a flag pattern. And the theory goes you measure the pole to the top of the flag, the bit that flutters in the wind. And in this case, it's around 580 pips. The theory goes if the price breaks out of that pattern, you measure it from the bottom of that pattern to the top. And that would be 570, 580 pips would take us to around $37.50. It's almost there. So for those who say technical analysis mumbo jumbo, it worked, and it's happened 4 or 5 times on Bitcoin recently, which I've also shared with you, and it does happen a lot. Now, I have been watching as ever the dollar index every week. The bias is simply to short the dollar index, the dollar rather. However, the dollar index had come down to a major area of previous support and resistance from January 2022, and therefore the rebound was not beyond the realms, and there was McD divergence on the weekly, giving us a clue that we could be on for a move back up again. It has now come back up and slammed into the trend line again. Now, I took a counter trend trade, and it's very rare that I do this, but I did this with a student yesterday. We took a trade here at the bottom. This is on a weekly again, and again we had McD divergence going on here as well, because price was flat across there, whereas it was clearly dropping much lower, significantly lower here. And it came down to a 200 EMA, previous major support and resistance, and we also had the monthly 55 EMA down here. And when you go onto a daily, you can see that you are risking around 69, 70 pips for a potential 140 just to the trend line. Now, price at the moment is deciding where it wants to go. On a daily, we have a indecision candle. On a 4-hour, it has broken and closed above the 55 EMA, which is now proving to be support. However, I am concerned, and because of the aforementioned FOMC, I am going to take a chunk off this now. Now, to partially close, you just right-click, go to close, make sure you don't have one-click trading turned on, and I am going to take off from this 75%. So you type in the 0.75, and then I am going to leave the balance to run. So that's one lot. Profit almost 2 to 1. Now we need to move the stop, and to move the stop I am going to move the stop. Let's go back to daily and let's go to 4-hour. I'm going to move the stop for now in here to 136.10 area, and then let's see what happens next with that one. This is the dollar yen, same setup as we've just shown with the Canadian dollar, and this was the previous one which I didn't take. But this was major previous support and resistance. So last time I was saying this was the area to consider counter trend trade. Now, if this is on a weekly chart at the moment, but if this was to drop today after FOMC all the way down here, that would be a 550 pip move, which is almost 4 days worth of movement. So depending on where it finishes this afternoon, I might be willing to leave this in. Now, if this drops down here today and gets down here, then I would be more likely to walk away and leave it alone. And so going back to the dollar index, we're at a trend line. The bias overall is still to short this pair, the dollar as is. And on the Swissy, we're back up at a trend line. Can't take this because we haven't got the 5 reasons. And once again, here you've got the 5 reasons. I usually need to take any trade. So if you've not seen this before, then there you go. Take a screenshot of that. EURUSD. Now, the EURUSD is in a clear uptrend and has broken above the monthly, 200 EMA. And for 8 or 9 days, this should have kept you out of a losing trade, because I kept saying to folks, do not long in here, because the probability is it's more likely to reject than not, because it's done it loads of times before. Now it's broken through. Now we do the standard thing. So we fib, we're looking for a breakout, which we've got, and now we're looking for a pullback. And I have the order set at the moment at 1.1434. I have the stop down here 70 pips away, which is about the most I like to go. But when you think in terms of 5 reasons, so you have the monthly 200 EMA, you've got the 50% fib just below, and the 61.8 to hide your stop behind, and the trend line. So we've got 4 reasons. We're in a clear uptrend, and this has been major previous support and resistance, and I've got a reasonable risk reward ratio, because I'm risking 70 for a potential 200. So it ticks the boxes for a trade. Now you could look at the pound conversely and say, well, the pound broke out yesterday, but I was saying to a student yesterday rather, I wouldn't take the pound because I didn't have the multiple reasons, and that turned out to be a good reason to avoid that one, because it fell all the way through. Whereas here you've got that multiple reasons scenario. Euro pound, this is one I may leave in through the FOMC news. Again, depends on where it ends up prior to that, at the London close. But if it stays up here, I have down here a massive area of previous support and resistance. I have the fib just above, I've got 61.8 below, I've got 2 EMAs, I've got the trend line in an uptrend. And if this thing was to get down there today after FOMC, that would be 110 pips worth of movement, and the average at the moment is only 36. So it's almost, well, it's 2.5 days movement. So I might leave that in. I might, if I do leave it in, I would probably reduce the risk. Aussie dollar. Now the Aussie dollar also looks promising to long, but the potential risk reward on this one is not as good as the euro, because you'd have to put your stop down here 50 odd pips away, and we're just scraping 1 to 2, but look what it's doing, it's just ranging. So you really, I said last week, you want this to break out higher, then pull back, and then we will be more confident taking the trade. NZD, very similar pattern, these are all correlated. Pound CAD too far away, pound yen, Aussie yen, CAD yen I do like the look of. So the Canadian dollar against the yen, once again, we're on the daily chart. It's rejected so far today at the 200. It rejected for the last couple of days at the weekly 55 EMA, which is why I use these two. If this is to drop down here today, that would be 150 pips with the movement, which is 1.5 times average daily range. And with this one, you could be more aggressive and put your stop at 30 pips, or have it down here at 55 pips, or have half of the order here and half of the order with the stop further down. So lots of variance there, but even with a 50 pip stop, you still have the potential to make a 1 to 3 risk reward ratio. If you're going to leave anything through the FOMC, don't have more than 1. This is a triangle breakout Ashley was showing you yesterday in the live training session, and we showed you this setup last week. If I was going to leave this through FOMC, if I chose this one, I would have the entry here at 156.15 and the stop in here 40 pips away with a potential 240 pip gain. Again, it needs to be, it's all dependent on where this starts prior to NFP. But if it came into here, that would be 115 pips, 1 day's worth of movement. Lots of opportunities. Make your mind up, choose the one with the best risk reward, and if in doubt, stay out. Catch you later.